Okay, cost concept. So today's topic is related to the cost. What are the different costs that we have? So now in this session that I'll be just going to explain the classification of the cost by behavior, classification of cost by traceability, relevance, function, and after then I'm going to explain about the what are the financial reports and how to prepare it, understand and prepare the manufacturing reports as well. So these things that we will be covering in today's section. So cost classification by behavior. So how a cost will react to changes in the level of business activities. So we can see there are two kinds of cost under the cost classification by behavior. The first one is the variable cost. Second one is the fixed cost. Variable cost. So as it is clear from the name, variable means changeable. So the total variable cost changes when activity changes. So due to the change in the activities, the variable cost change, right? So uh, the fixed cost is different. So fixed cost is that remained unchanged when activities change. Number of activities are there when they are going to change some activity, but a fixed cost is not going to change. Take an example of a rent of the building. So rent of the building that is not going to change. Whether that you have produced more articles in your manufacturing unit, or you have more employees or less employees, it doesn't matter. The fixed cost that will remain the same, right? Maybe if you have your godown or warehouse or office that is on the fixed lease for 5 years, and the per month expenditure that will remain the same, is not going to change or when the activity changes. So this is the cost classification by behavior. Now the variable cost, the total cost of a battery packs, for example, is based upon the number of cars produced. For example, if more and more cars are produced, more and more batteries are required, right? So in this case, total cost of battery packs is going to increase, right? And with the number of cars. If there are 5 cars, then 5 batteries are required. Battery packs are required, right? If there are 10, and accordingly, the total cost of battery packs will increase. So as the activity go up or down, means some modifications of the activity, on the basis of that, the cost of the battery packs that will also increase. On the other side, we can say the average battery pack cost per car will remain the constant. Means if the number of cars are increasing, if number of cars are increasing, average battery pack cost per car will remain the same, right? So if the one car, then cost of the battery packs, that is like $10, for example. Then if there are 2 cars, so again $10 for the next one. So average will remain the same. It means if we talk about the average, total number of cars, total number of car produced, uh, then divide by the total number of battery packs, right? So that will remain the same. I would like to explain with one example more or elaborate in such a way. Let's say 10 cars and 10 pack cost. So battery packing cost 10. So uh, we know that the cars that we are producing and the battery is required for the car, right? So exactly the same prices, same batteries, same everything that is required, that is the required. And so that will remain the constant mean to remain the same. Average battery pack cost per car will be the same, right? So this is the variable cost. Now if we talk about the fixed cost, in the fixed cost, what is happening? Let's take an example of the hospital. For sick children's monthly machine rental cost, that does not change regardless of how many tests are performed within a relevant range. So number of tests, if the number of tests is 1, number of tests are 2, rent of the building, rent of the machinery, that will remain the constant. For example, the big machinery is there, and that is really very costly, maybe like $250,000, and the rent is $10,000 per month, right? So monthly rent is 10,000. If the number of tests performed maybe 10, again that will remain the same. We have to pay $10,000. If the tests are 4, again that you have to pay $10,000. If the tests are 10, even then that you know out from the 10 that you will be earning some amount, but the monthly rental cost will be the same. As the number of tests increases, right, that a cost that will reduce, because the monthly rental cost is a fixed, that is the fixed cost, irrespective of the number of tests increased or decreased, low, medium or high, it doesn't matter. The cost you have to pay. So these are the fixed expenditures. Company will get more profit when there will be more tests performed with that particular machines. So if we talk about the average monthly rental cost, that definitely will go down. You can see on the right hand side one graph. So hospital of the 6 children's average machine rental cost per test decreases as more tests are done. Here that you can see from here that here we can see the number of tests performed. Let's see, this is 1. If the number of tests is 1, average cost is this one, right? So as the number of tests are increasing, the cost will be decreasing. 2, 3, and maybe like 100, 200, 300. The cost, average monthly rental cost per test will go down as number of tests performed increased. So this is the fixed cost. Ultimately, we can say the fixed cost that will remain the same irrespective of the number of tests performed. But on the other side, that uh, the average monthly rental cost will decrease if that number of tests performed that increased. Now, fixed cost and the variable cost, right? So we have discussed this thing. Now, what happened? The cost classification for predicting cost behavior. So behavior of the cost within the relevant range. What it is saying, the cost variable and fixed in total and per unit. If we talk about in total for the variable cost, total variable cost changes as activity level changes. So variable cost will change when activities change, right? Uh, for example, that if you have, let's say, a mobile manufacturing company, laptop manufacturing company, and you produced a laptop 100, then for the packaging of that 100 laptop, you need some cardboard, you need tape, you need other things. As the production increases, other expenditure also increases. That is the variable cost. You have to buy uh, more cardboards, more packing materials, more cello tapes, right? So more things are required to pack those ones. So it means as the productions that increase, and the variable cost will also increase. So in this case, what happened? The per unit, the variable cost per unit remains the same over the wide range of activities. There will be no any difference. Per unit cost that will remain the same for that particular. For example, the one cardboard and the one box is just for $2. If you have produced or manufactured a one laptop, the one $2 you need to spend. Okay, so per unit cost is $2. Okay, if that you have produced a second laptop, you need to have another packing material, another box. Again, you will spend $2, right? So $2 again that you will spend, and so on. So per unit cost that will remain the same in case of a variable. Okay, but in case of a fixed, total fixed costs remain the same even when the activity level changes. So fixed cost per unit goes down as activity level goes up. Activity level mean that productions goes up, more and more productions, but the fixed cost is the fixed cost, right? So it means average, you can say, per cost will be reduced. Now, so this is the one a question in front of you. So what you need to do, like, so look at this, the quick check. Which of the following cost would be variable when with respect to the number of cones sold at the Baskin and the Robin shop? So there may be more than one correct answer. So what do you need to do? You need to send answer directly to me in the chat. Directly. So directly means not to everyone. Yes. So you need to send this one. I'll check it. Okay. So I'm giving you 1 or 2 minutes. The question I'm reading, which of the following cost would be variable with respect to the number of cones sold at a Baskin and Robin shops, right? The cost of lighting the store, the wage of the store manager, the cost of ice cream, the cost of napkin for the customer. So what will be the right answer in this case?
Cost of napkins.
Okay, just write and send a message directly to me. Okay, so in this case, so we can say that the cost of the ice cream and cost of napkins for the customers. So these are the variable cost. Now, next question is in front of you now. Which of the following cost would be variable with respect to the number of people who buy a ticket for a show at a movie theater, right? So there may be more than one correct answer. So it means what we are going to do, we are just going to evaluate that if the people, more and more people are buying tickets for movie theaters, then we need to know the variable cost. Cost of renting a film, no, that is the fixed, every time that will be fixed. A reality on a ticket sales, oh, we can think over it. Wage and salary cost of the theater employees, I think it should be fixed. The cost of cleaning up after the show, that we will see then, right? Okay, so I send answer directly. Yes, as more and more tickets are being sold, more royalties to the owner have to pay to the film industries, right? To the film from where the film has bought, right? That movie has bought. So more royalties on the tickets, right? So wages and salary, if we talk about, right? So wages and salary. So that cost, that may be, because it depends, like if it is wage and salary cost of theater employees, if it is like Mm, it depends upon if they are working per hours, right? So accordingly, that variable cost will be there. So specifically, if we talk about the royalties on tickets, that is the more appropriate and right answer. So one ticket, they will have to give the expenditure will be, let's say, if the cost of the ticket is $10, then the variable expenditure for that ticket, maybe $1 that you have to pay. That is a variable. If two, then $2. Three, the three. But per ticket, that the cost will remain same. It means average cost will remain same as there is increase in the sales of that particular tickets. Wage and salary cost of the theater's employees. So no doubt, if more people will come, then the more wage and salary cost will be there, because more and more employees will be required to handle that situations, handle that rush, right? So there may be a little bit increase in that expenditures. If it is a fixed, if the salary is a fixed, everything is fixed, then there will be that we cannot consider this is the variable cost. That will be the fixed cost. If that is on hour basis, then definitely more and more hours, more and more employees that will be required. If the one employee can handle, that's okay. But if like two employees need, then three employees need, right? Because it is too much rush that one person cannot handle the situation. So in that case, we can say that will be the variable cost. Okay, so now, okay, we can see that total classification by the traceability. How costs are assigned to the cost objects. Cost objects, anything for which the cost information is desired. For example, department or a division or product line. So cost object. So cost will be assigned to the cost object. So that is the traceability. Trace mean find out. Let's say there are a number of products in the department. So different products are there. How we will be able to calculate that this product cost is this much, and the second product that you are having, that cost is this much. So that will be according to the classification by the traceability. Take an example. If the mouse and keyboard set is there on the other side, that if you are going to produce one a small lamp, uh, or a third one is a headphone. So manufacturing of headphone, manufacturing of keyboard, mouse, manufacturing of that lamp that can be used, electrical lamp that can be used for this. So looking the keys on the keyboard is a small lamp, right? So that you will be able to see the words even at night. So different products. So how we will calculate that what is the cost of one product, that particular different product line, right? So and the different departments are there, and different divisions are there. So now in this case we need to trace it. It means we need to find out. So that is known as a cost classification by traceability. Let's see. Now, the next one we have here, direct cost and indirect cost. We have two kinds of cost. Direct cost means, for example, that we are buying some materials, and we have direct cost related to that material, means bringing that material into the factory. That cost that can be easily and economically traced to a unit of a product or other cost object. Means those costs that can be easily and economically traced, so traceable, uh, that of unit of product. Let's say one machinery that we bought, and so bringing that machinery into the manufacturing unit, that is like $2,000 is the direct cost. Raw material that we purchased, so that is also the direct cost, right? That we know, uh, that we can trace it. Hmm? Easily we can trace it. For example, direct material or direct labor. So that will be the direct cost, easily can be traceable. Second, we have indirect cost. So this cost cannot be easily and economically traced to a unit of product or other cost object. Like we are not able uh, or in a position to calculate the or to trace that cost, which is known as indirect cost. Manufacturing overheads. So in this case, there will be some indirect manufacturing overheads. So for example, the electricity bill is there. So electricity bill is a manufacturing overhead. So electricity bill that is used for making a production of keyboard mouse, making a production of a lamp, and making a production of other devices, right? So how we will be able to know that this electricity bill and electricity utilities or employees are working, and also they are working to handling all these three kind of products. So that will be indirect cost. We cannot calculate, we cannot trace it very easily. So the traceable or untraceable. So direct cost and indirect cost that we have. Now, direct and indirect cost of an individual flight. For example, so one flight is here. So cost object. This is the cost object, right? So one flight, one airplane, right, is the cost object. So direct cost and indirect cost that we have. So direct cost is flight attendant, like flight attendant. So air hostesses are there, right? So on a captain that will be there, okay? And the fuel from one place to another place, there will be some kilometers and a fuel. So these three things can be traced very easily, can be calculated very easily. Like if the number of attendants are there, maybe 5 or 6, then they will be able to find out how much will be the cost for one day, one trip. So direct cost for this one. Okay, this is for one day, maybe for 1 month, or for maybe for 1 year. So direct cost. Now indirect cost. So indirect cost is a baggage handler. No doubt in the flight that when you go to airport, baggage handlers are there. Ticketing staff is also there. So ticketing staff is that is not only just for the flight, that is also for other works. And accounting staff is not going to calculate just for one flight. There may be number of things they are just working as an accountant. So that will be overhead cost, you can say, or indirect cost, that I have given one example of that. Now next we have here cost classification by relevance. Now if you talk about the relevance, so there will be a relevant cost. Means decision makers must only use cost that are relevant to the individual decisions. So in this case, we will take into consideration the relevant cost, right? So that cost is relevant to this particular project, right? Or manufacturing units. Look at this. Every decision involves a choice from among at least two alternatives. So there are only those costs and benefits that differ between alternatives, mean differential cost and benefits are relevant in the decision. All other costs and benefits can and should be ignored. It means relevant cost. So if this cost is relevant to the particular decisions, so that will be the relevant cost. And only those costs and benefits, right? So that will be taken into considerations while taking the decisions. And the rest of the cost and benefits that should be ignored. Okay, now look at this. Differential cost and revenue. So differential cost and revenue. Cost and revenues that differ among alternatives. We have a different alternative. Now look at this. Retailer distribution. This is the current position, right? And online selling is proposed, and differential cost and revenue. That is the difference between this and this. This is a differential cost, right? So this is the differential cost. Look at this. Revenue is, for example, $700,000. Cost of goods sold. So cost of goods sold means
We cannot see your slides.
so look at this. Differential cost and revenue. Now we can see that the retailer distribution, current situation, and this is the proposed. We will consider first and second, and the third will be the difference between these two. Let's say this at present we say that 700,000 is the current position. Retailer distributions revenue. Revenue means sale. So online, if this is the proposed, if that instead of retailer distributions, if that company decide to sell the product online, right? So that is the proposed. So now that we want to take some decision, so decision that will be taken if we calculate this, what will be the net profit or net income proposed. If it is good, then definitely that we will go with that decision, otherwise not. So look at this. The cost is this one, the cost of goods sold, right? And advertisement cost, warehouse depreciation, and other expenditures. So 700,000 is a sale. After selling that, a company received this much of money in case of a retailer distribution. And the total expenditure is the 540,000. So 700,000 minus 540,000, the net income will be $160,000. So this is the one thing. So in this case, you can see that if there is a V means a variable cost, and F means the fixed. So revenue is the variable, right? And V is this is the fixed expenditure, the cost of goods sold. This is the advertisement is the fixed. Cost of goods sold is also variable, right? And warehouse depreciation, that will be fixed, right? And other expenditures are fixed. So let's say 160,000 is the net profit, but if it is the proposed 800,000 minus 650,000, if that business they are just going to change from the retailer distribution to the online selling, that is the proposed, which is not right now working on that. The profit, expected profit, proposed profit is $145,000. So currently, whatever the practices they are doing in the retail distribution, instead of online, they are earning $15,000 more, right? If they choose this one, so what will happen? So that will be the $15,000 loss. So in the decision to move from the current method to the selling to the online selling proposed method, there is a negative net income effect of $15,000. So differential cost. Now, so this is one question in front of you. Suppose you are trying to decide whether to drive or take the train to Portland to attend a concert. So two options are there, whether you need to drive by car or you need to take a train. You have ample cash to do either. You have money, but you don't want to waste money needlessly. So in the cost of in the cost of the pizza you ate last night, that relevant in this decision? This is the question. In other words, should the cost of a pizza affect the decision of whether you drive or take the train to Portland, right? So what is the right answer? Send me directly in the chat. What is the right answer? Send me directly in the chat. Next question is in front of you. Suppose you are trying to decide whether to drive or take a train to Portland, right? To attend a concert. You have ample cash to do either, but you don't want to waste money needlessly. Is the cost of the train tickets relevant in this decision? In other words, should the cost of train tickets affect the decision of whether you drive or take the decision to Poland? So there are two options, option A and B. Write your answer in the chat box. Next question is in front of you. Suppose you are trying to decide whether to drive or take a train to the Poland to attend the concert, and you have ample cash to do either. Same question, but you don't want to waste money needlessly. Is the annual cost of licensing your car relevant in this decision or not? This is the question. Think over it and send answer uh, directly to me in the chat. So next question is in front of you. Suppose you are trying to decide whether to drive or to take train to the Poland to attend a concert. You have ample cash to either, but you don't want to waste money needlessly. So is the depreciation on your car relevant in this decision? Yes or no? You need to write answer in the chat box. Yeah, quickly. In this case, the answer is A, because we know that depreciation, that is a function of kilometers and driven, that would be relevant. That would be relevant. So depreciation of the car, if the more and more kilometers your car runs and you drove it, then the value of the car will go down. That is known as the depreciation. And wear and tear as well. Deteriorations of the tires and machines, maybe engine. You need, if you more drive, then the service expenditures after, let's say, after 5,000 kilometers, you need to get your car serviced. Then if you are driving too much, then that cost uh, will be incurred very soon. Maybe two, instead of one time in a year, 3, 4, 5, 6, 8 times in a year. It all depends upon the kilometers that is driven.
Sir,
So
sir, but why the kilometers and the uses of tire is not mentioned in the question?
yes, so uses of a tire is not mentioned, but so look at this question once again. So is the depreciation on your car relevant in this decision? So at the time of depreciation, not only the tires count, it counts each and everything. You're getting my point?
Yes.
Not only the tires. I have given the example of engine. I have given the example of the services, that after 5,000 kilometers that you need to get a service done. The performance will also go down, right? There will be a deteriorations of the internal parts of that car. So it means the depreciation is going down. Not only these things, but also the model. If you're buying this car 2023 model and there is a 2010 model, then it means for long period of time, if even then that you have not used that car, due to the passage of time, that the value of the car has gone down. This is known as a depreciation. That matters a lot and is relevant. You're getting this point?
Yes, Professor. Thank you.
Good. So depreciation, that is the function of passage of the time, that would not be relevant. So if we talk about here, this is if you if we talk about the kilometers in this case, because here that they are going down. If this is the passage of times, that would not be relevant in that case. So how much time it will take to go there, it's not going to affect something. Okay, but how many kilometers they are going to say, like so 10 kilometer, 20 kilometer, or 200 kilometers, so definitely there will be some deteriorations of there will be some more expenditures. Opportunity cost. So the potential benefits that is given up means that you're giving something when one alternative is selected over the other. That is known as opportunity cost. I can give you one example. If you have $100,000 in the bank and a 3% rate of interest that you are getting from the bank, that is a $3,000 per year. If that money you are going to invest in somewhere, maybe in the real estate or somewhere, let's say that you start your business. So uh, whatever that you will be getting is a different part. But the thing is that $3,000 is that you were earning, but now you are not earning. That is opportunity cost. So look at this. For example, if you were not attending the college, you could be earning a 30,000 per year, right? Let's say that you left the college and every month that you are earning some amount of money, maybe $15,000 for 1 year is $30,000. Your opportunity cost for attending college for 1 year is 30,000. That is opportunity cost. You are attending college, but if you don't attend the college, then you will earn money. So that if you suppose that you would be earning that money, if you don't attend the college, that is $30,000 will be opportunity cost. Opportunity cost of attending college for 1 year. Sunk cost, that cannot be changed by any decision. So they are not a differential cost and should be ignored when making decision, right? So that is the sunk cost, cannot be changed by any decision. For example, you bought an automobile that cost $10,000 2 years ago. $10,000 cost is sunk. Sunk mean already that you spent the money. The money that you have already spent is a sunk cost, because whether you drive it, you park it, you sell it, right? You trade it, right? You cannot change the $10,000. $10,000, that is an expenditure which you did, that is done, right? So you are not going to change anything, right? So that is known as sunk cost, which cannot be changed by any decision. So in future that you want to take some decision, but that cost is done, which is already incurred, is known as sunk cost. Now, one question is in the front of you. Look at this. Suppose that your car uh, could be sold now $5,000. Is this a sunk cost? Yes or no? Write your answer in the chat. Okay, so look at the answer. No, it is not a sunk cost. The reason being, this is like what we are getting today. Once we sell this one, that we will get $5,000, irrespective that you bought it from time. So you bought at $10,000, that was the sunk cost. Today you are you are recovering today is not a sunk cost, right? Okay, now the value chain. So cost classification by function. The series of steps that every organization carry out to fulfill its mission. There are a number of steps each organization carry out to achieve their objective. The activities within these steps. The one step, there will be number of activities. Step number 2, there will be some activities. 3 and 4, so on. All these steps and activities are performed by the various functions within the organization. That is known as a value chain. Look at this. The plant cultivation, right? Then seaweed harvesting, then product and application development, right? Then production, and once the production is done, goods are ready, then will be ready to sell in the market. So marketing, that will be done. Once the marketing is done, goods are sold, then customer support unit is required. That is the process. So step by step, 1, 2, 3, 4, and in each step there will be number of activity. The whole thing is known as chain, value chain. Okay, now if we want to compare merchandising and manufacturing activities, there are two things. We start with the first one, merchandiser. So merchandiser is here and buy finished goods already. Like for example, take an example of Best Buy, take an example of Walmart superstore. They buy finished goods, so maybe grocery item or other clothing or furniture or anything, and sell to the market, right? Sell to the customers. They are merchandiser. So they sell the finished goods. But on the other side, that in a manufacturing, right? So in a manufacturing unit, so manufacturers, if you talk about the manufacturers, so they buy the raw material. If so, for example, dairy milk that is available, then butter is available. Okay, so the Walmart is selling, superstore is selling, Sabji Mandi and Fruticana, they are selling those articles, those product or grocery items, but manufacturing unit is somewhere. We can take an example of Ashirwad Atta. We can take an example of right, you can say the desi ghee that we have from the different manufacturers, right? So maybe the Verka, like you can say. So those are the manufacturing unit in which raw material they buy raw material, then after then they produce it, they produce and sell that finished goods to the merchandiser. So manufacturing unit is a different and the merchandiser unit is different. So now let's say talk about the manufacturing cost. If you talk about the manufacturing cost, then there will be a direct material. Let's take an example here. Then direct labor and the manufacturing overheads. So in this case, direct material, that iron and everything is brought, direct material, then a direct material and manufacturing overhead. So by making all these expenditure, this is also expenditure, this is also expenditure, and this is also expenditure. So all this is known as manufacturing cost, direct material plus direct labor plus manufacturing overhead. So one unit is the produce, the product, that is the manufacturing cost. Let's say direct material. Look at this. Those material that become an very important and integral part of the product. So product is a car, an integral part of the product, right? So some material is required, and that can be easily and economically traceable or traced directly to it. Let's say metal used to make the automobile's bodywork. So what, how much metal was used? There were 1, 2, 3, 4 rims were used, then tires were used, steering was used, axle was used, engine was used, right? So some other parts of this that was used directly. So direct material. We as a manufacturer will be very easily to trace those direct costs. So that is one, that is known as a direct material. Now direct labor, those labors, the cost that can be easily and economically traced to the individual, means the one unit of a product for one car, wages paid to the automobiles assembly workers. So automobile assembly workers are there, maybe 1 or 2 or 3 number of workers are there, and number of cars were produced. So direct expenditure means direct labor, and after the direct material, we will be able to trace it very easily. So direct labor is there. Now, next we have here manufacturing overheads. Manufacturing cost that cannot be easily and economically traced directly to specific unit produced. Now the specific unit were produced. So in this case, that we will say that manufacturing overheads were there. So manufacturing overheads are indirect, not a direct. Indirect material, indirect labor, and cost incurred to the run the factory. So those were the indirect expenditures. So that we cannot easily trace for one unit. No, we cannot. So that is known as manufacturing overheads. Now, wages are paid to the employees who are directly involved in the production work. So, involved in the production work, for example, maintenance worker, janitor, and security guard. So, security guard is outside there, is not going to contribute. What do you think that they are not going to contribute anything for the manufacturing unit? Yes, they are contributing, but how we can say that that person contributed in making a one car, what will be the cost involved for that particular security guard or janitor or maintenance worker or cleaner, right? So that will be associated with one unit. So directly we cannot trace it, but indirectly these are the expenditure, definitely we will add in the cost, right? We cannot say only direct expenditure and direct labor will be added. Indirect labor, indirect material, and cost, indirect cost to run the factory. So all these costs are known as manufacturing overheads and will be added. Then this is the labor and this is the material. A material, for example, that material used to support the production process. That is the lubricants are used. For lubricants that are used to run the machine, to clean the supplies used in cane assembly plants, right? So those lubricants are used, those services are done. But how we can see that these like maybe like 5 kilograms of lubricants used in 1 month or a year? So that is also one of the cost. Maintenance cost is there, right? So that material is used, but we cannot calculate that this material is used directly to the machinery, right? So that is the indirect material, you can say, right? Now we can say the cost incurred to run the factory, for example, rent of the building, then water bill, electricity bill, gas bills, means all that comes under utilities and maintenance. So that will be the cost incurred to run the factory. Now, if we talk about the classification of costs, as we have discussed, manufacturing costs are often classified as a direct material, direct labor, and manufacturing overhead. If you talk about the direct material and the direct labor, both is the combination of these two is known as a primary cost. And the direct labor and manufacturing overhead, direct labor and manufacturing overhead are known as conversion cost. I'm repeating once again. Direct material and direct labor is combination of these two. Combination of these two, if we add these two, will be the prime cost. Okay, so prime cost, and this one is a direct labor and manufacturing overhead. So if you add only these two, that is the conversion cost, right? Because that direct labor is required to take that material, to convert that material. If we take an example of a car, so direct labor is required to convert that material into the finished goods. So some converting there something. They are converting that material into the finished goods to make a whole product. So something is required. The labor is the one thing that will be helping in converting that material, converting the iron, converting that product which they have brought directly, maybe the car rim, maybe steering or engine. So they will be going to assemble everything, like a body part, accessories, music system. They will be going to assemble the LCD inside, mirror, and all that. So who is required? The labor is required. So labor is going to convert something. So conversion cost. So direct labor and manufacturing overheads. So manufacturing overheads means that I have already discussed. Look at the previous slide. Manufacturing overheads. These are the manufacturing overheads. Indirect labor, material, and cost. So those things are also helping in conversion of that one product. So this is known as conversion cost, and that's why this is known as conversion cost that I have explained. Next, we have non-manufacturing cost. So one is the manufacturing cost that we clear. So another one is non-manufacturing, but it means that cost is not related to the manufacturing of the unit. The and labor and the indirect expenditure, labor and the manufacturing cost. Look at this, manufacturing overheads. Manufacturing overheads. These are indirect labor, indirect material, indirect the cost incurred to run the factory is known as the manufacturing overhead. So that is the manufacturing. The cost which is related to the manufacturing of the unit is known as manufacturing cost. Now, next is non-manufacturing cost, which is also known as administrative cost. The cost associated with the general management of the company means all executives, organization, clerical, salary of the employees, the company's president, salary, officer supplies, not for the manufacturing, just for office, right? So that is a non-manufacturing cost. So marketing and selling cost. So marketing and selling cost is also next one. Administrative cost is a non-manufacturing cost. Marketing and selling is also non-manufacturing cost. So these two costs are not associated and linked with the manufacturing of one car, for example. The cost incurred to secure orders, deliver the product to the customer, and follow up them. There may be some marketing team, marketing manager, selling and distribution, advertisement, everything. So that is not related to manufacturing. That is related to selling, known as non-manufacturing cost. Examples: sales, commission, salaries, and advertisement. Now, so look at this example, which is in front of you. Okay, so now look at the answer. A and D, depreciation on factory forklift truck. So there is a forklift truck in the factory that is used for the manufacturing purpose. So in the factory, so when there is a factory, it means the like depreciation, that is a manufacturing overheads. Second, wages of production shift. So production means manufacturing. It's related to production of something. So production shift supervisor is also there. And look at this, the A and the production shift supervisor D. Sale commission are not required. Cost of the flight recorded. Cost of the flight maybe you can say direct or indirect, both that you can add in the cost of a flight recorded in the Boeing 769. So A and D is the right answer. Look at the next one, product cost versus a period cost. What are the difference between these costs?
User.
Ye- yes. So next cost are the product cost and period cost. So first is the product cost. Product costs include direct material, direct labor, and manufacturing overhead that we had discussed earlier. So that is known as product cost. You can see that if we talk about the inventory, so inventory and the second one is the cost of a goods sold. These are the two costs. Inventory that is manufactured here, and rest of the inventory that will come in the balance sheet. I mean to say, if there will be some stock at the end of the period, then that will be the inventory, and that will be showing on the asset side of the balance sheet under current assets. So that will be inventory. That will be work in progress, finished, and raw material. So all these inventories that will be calculated, that will be posted here in the inventory part. Now the second that we have a cost of goods sold. So some of the goods that we have already sold, what is the cost of those goods which have been sold, right? I'm not talking about the goods which is remaining there. I'm talking about the goods sold. So what is the total cost of those goods that were sold? So that will be coming under the income statement. So this is the product cost. Now on the right hand side, you can see the period cost. So period cost are not included in the product cost. Period costs are a different cost. Product cost is a different cost. So they are expenses or expensed on the income statement, right? On the income statement. Now you can see that. So this cost is the expenses that only will come in the income statement, right? So this is known as the period cost. Let's take an example. Which of the following costs would be considered as a period rather than a product cost in the manufacturing company? If there is a manufacturing company, there will be a period cost. What are those period costs? Let's say A, B, C, and D. A is a manufacturing equipment depreciation. Is not a period cost, we know that. Property tax on the corporate headquarters, we discuss later. Direct material cost is not a period cost. Electrical cost to the light, the production facility, indirect expenditures or manufacturing overheads, right? So all these are not A, B, and D. That we cannot say these are the period cost. So period cost is property taxed on the corporate headquarters. That is the period cost. That the period cost that will come under the income statement. Now, so look at the balance sheet here. So balance sheet here for the merchandiser. So there will be some current assets like a cash, receivable, prepaid expenditure, then merchandise inventory, right? Take an example of Walmart, Superstore. So Fruticana, Sabji Mandi, all these are merchandiser. Best Buy is a merchandiser. Costco is a merchandiser, right? So don't manufacture. So they are just selling those products. We have their current assets here on that side. If we talk about the manufacturers, so definitely we will be having a current assets, just like cash is equal to the same receivable, same prepaid expenses, that is also current assets will be the same, but inventory that will be different. Here that will be merchandise inventory, mean finished goods, but here for inventories that will be in the manufacturing plant unit. So that will be raw material, work in progress, and finished goods. That will be for the manufacturer. This is for the merchandiser. Now look at this balance sheet for the manufacturers. That we will see material waiting to be processed. That is the raw material. And the work in progress is what? That is the partially complete products, or some material, labor, or overheads have been added. So that is the partial. It's a work in progress, but not finished. Goods are not finished. So that is known as sorry, work in progress. Take an example of a car. So car, some rims that we have added, some steering that we had. So now still there are some of the parts that we need to be added to make a complete car, right? So that still in progress. It is in process. So the last one is a completed product that awaiting sales, right? So goods have completed, but that is also in the manufacturing unit, manufacturing plant. So that is also inventory. Income statement. Cost of a goods sold for manufacturer is differs only slightly from the cost of goods sold for the merchandiser. So merchandising company, you will see here cost of goods sold, how we will calculate. Beginning inventory, merchandise, right? Costco I'm talking about, Superstore I'm talking about, Best Buy I'm talking about. Some of the inventories are here related to the different products we purchase. Then minus closing stock means ending inventory, Inventory means stock simply, right? And the rest will be the cost of goods sold. Means you can say opening stock plus purchase minus closing stock. Very simple. Opening stock plus purchase minus closing stock. That will be cost of goods sold. Now look at this. This is also the same, but in a different way. Look at this. So cost of goods, beginning, finished goods inventory, right? And here cost of goods manufactured, right? So in this case that we are not going to add here something. So this is what we are going to calculate. We are going to calculate that the what will come in the income statement. Goods available for sale, that will be this much, minus ending finished goods, and that will the cost of goods sold. So cost of goods sold, cost of goods sold. Here that we say finished goods inventory, ending of the finished goods inventory, right? And here that is the beginning of the finished goods inventory. So that will be how we will calculate the cost of goods sold in a manufacturing company and merchandising company, right? So here, instead of writing here purchase, we are just going to write cost of goods manufactured. Cost of goods manufactured means at the final stage, we find that there are 5 cars in the factory, in the manufacturing unit, 5 cars are there. So beginning, at the beginning, means on 1st of January, we find that 5 cars are there and costing this much, plus cost of goods manufactured, right? So this is cost of goods manufactured. So some of the goods that we definitely will add here, that what will the cost of goods manufactured, what are the expenditure of that, we will be added. Now less the finished goods inventory, that will be added. Now that will the cost of goods sold. Which of the following transaction would immediately result in expenses, right? So immediately result in expenses. Okay, so work in progress is completed, finished goods are sold, raw materials are placed into production, administrative salary are incurred and paid. Write your answer in the chat directly to me, right? So write your answer in the chat quickly. Write your answer in the chat. Okay, so look at the right answer. Finished goods are sold and administrative salary are incurred and paid. So it means, so these transactions are considered as expenses, because once the finished goods are sold, there may be some expenditure for selling of the products. So finished goods are sold, right? Then administrative salary are incurred and paid. So once the finished goods are sold, it means definitely if one car is sold, what will be the cost of the car? Cost of the car is $50,000, sold at $55,000. It's a different, right? But once the car is sold, it means there will be some cost of the car. So cost of the car is expenditure, very simple. And salary are incurred and paid is also expenditure. So once the goods are sold, definitely that will be, there will be cost, there will be expenditure of that, right? For manufacturing that sold goods. So that's why B and D is the right answer. Now look at this inventory flow. Now generic cost flow through the inventory account. So in this case, we find that in addition, so first of all, inventory at the beginning, add to the inventory available to sell, withdraw from the inventory, then inventory at the end, right? So that is a generic cost flow of the inventory account. It means opening stock, add purchases, So less closing, less withdraw. That inventory which is a withdrawn, then that will be the closing stock. Withdrawn means that may be shifted from one place to another place, right? Maybe from the manufacturing unit to the showroom. Inventory flow. Look at this. Beginning balance plus additions is equal to available. Then available minus withdraw, that is equal to ending balance. Look at this. If the bank balance at the beginning of the month was 1,000, you deposited 100, and during the month, okay, and withdraw 300 during the month. What will be the balance at the end of the month? Write answer quickly in the chat box. Yeah, quickly. Yes, Mohammed the first. Yes. Who is the second? Yes, quickly. Yes, so right answer is 800. So 1,000 plus 100 minus 300 is equal to 800. Now next is inventory cost flow and cost of goods sold. Now look at this: merchandising, manufacturing, and merchandising and manufacturing. So look at this on the left hand side. What we see, that if it is a merchandising, so schedule for the cost of goods sold will be prepared. In case of merchandising, merchandising means like Costco and Superstore. I give example. Uh, merchandising inventory, right? Plus purchase, that is the BEG beginning. This is E and the end. So opening stock plus purchase is equal to, this is the goods available for sale, okay, minus if you say closing stock, then last will be the cost of goods sold, right? So means uh, at the beginning that we have stock, then definitely that stock will be at the cost price. So plus purchase at the cost price, and goods available for sale means closing stock is also at the cost price. Then uh, means goods available for selling is also cost price. At the end, merchandising inventory at the end on 31st of December, there is a closing stock at the cost. So cost of a goods sold, rest of the money will be cost of goods sold. Okay, so now the cost of a goods sold that we have here. If we talk about manufacturing and merchandising, both, let's say one company manufacture uh, as well as merchandising. In the income statement, what we will write, what is the sale, because that merchandising is selling some of the goods. So sale minus cost is equal to gross profit or gross margin minus operating expenses or net profit or net income. If we talk about the manufacturing here, then what we can see that in the manufacturing unit, schedules of cost of goods sold is prepared just like the same finished goods inventory, my finished goods. So this is the beginning plus cost of goods manufactured is equal to cost available for the sale, goods available for the sale minus finished goods is equal to cost of goods sold. So in this way also the goods sold will be calculated. Then we have here the next point is the cost of goods manufactured here. So how we can come to know about the cost of goods sold, goods manufactured. So direct material plus a direct labor plus manufacturing overhead is equal to total manufacturing cost plus work in progress inventory minus work in progress inventory at the end, the cost of goods manufactured. And a schedule for direct material used. Direct material plus purchase, then we have a minus direct material at the end, the direct material used, that will be written here. So these things that I will explain in the next class as well, so make you understand in detail. Okay, so for today, so for till this point, I have covered a number of costs. From here that we will continue in the next next week, I'll be explaining all these things in detail.